Hi friends, welcome back to the channel. If you are new to the channel, my name is Wilfred. I am an entrepreneur and an investor. On this channel, we discuss personal finance and more. Before we begin, let's look at some statistics. 95% of those watching my videos haven't subscribed to the channel. Come on friends, it costs you nothing. Subscribe to the channel down below to learn more about personal finance and be notified whenever I post a new video. Share the video with your friends and family to help someone else make a difference in his or her personal finance. So let's go straight into today's topic. Today we discuss credit scores. What is a credit score? A credit score is basically a score that tells everyone how well you are managing your credit. The higher your credit score, the lower the risk of borrowing you money. The score varies from 300 to 900, with an okay score being around 750. This information is made available by your credit bureau. The credit bureau is simply the big boss that oversees your credit. This information can be provided to your bank, your telephone company, mortgage brokers, and also your car dealers to help them determine if you are able to make all your monthly payments on time without defaulting. A good credit score will help you get the best interest rates when shopping around for a mortgage or any loan for that matter. If you want to know how to monitor this credit score, your credit score is made available by the credit bureau. There are two known credit bureaus in Canada, Equifax and TransUnion. You simply have to create an account on their website. Next, you have to pay to see your credit score. I know, it's not free. You need to have a monthly subscription to view your credit score on these websites. Another easy way to check your credit score is through your online bank if they allow it. If you are using RBC Bank, it's made available through the online banking portal. You just have to sign in, and on the right pane you will see a section down below that says check your credit history or check your credit score. If you are using CIBC, it is available on the phone app. The score might vary from one platform to the other, so you have to take this into account. On RBC, the score is provided by TransUnion, so I think it's a good enough example. I don't have a good credit score either, but being able to keep an eye on my credit score really helps me see how good or bad I'm doing and the factors that affect my credit. This is very important. What are the factors that can affect your credit score? Multiple factors can influence your credit score, amongst which include the number of new credit card requests you make and your payment history. If you pay all your cards on time, then you are okay. If you pay often and before the end of the month, the better. The easiest way to pay this credit card is to always make sure you make your minimum payment before the deadline and before and after receiving your monthly statements. Here are the 5 main factors that can affect your credit score. The biggest thing that can affect your credit score is your payment history. This accounts for about 35% of your credit score. This means that if you make your payments on time, then you have 1/3 of your credit score covered. The rule is simple: don't ever miss a payment. If you can't make the full payment at the end of the month or at once, then make sure you always make the minimum payment, and if possible, pay more than a minimum payment. The next big factor that influences your credit score is your credit utilization. This basically calculates how much is used versus how much is available. A low utilization is preferred. The more you use your credit, the higher the risk of defaulting. Typically, it is recommended not to use more than 30 to 40% of your credit. What this means is that, let's say you have a credit card and it has $10,000 as a credit limit. If you spend $9,000 on that credit every month, you are using 90% of your credit. To banks, it seems really high risk because they are worried that if they give you any more credit, you might not pay them. If you always pay your full balance, then your utilization is 0%. So if possible, don't keep a balance. Keeping a balance will only keep you paying for interest, which is really a bad debt to have. The next factor that affects your credit history, that affects your score, is your credit history. What credit card issuers want to see is that you are using your cards long term. And so this is where it makes sense to have a good strategy. The longer you show that you are responsibly using your credits, the better in your position you are. And the higher your score will be. So don't close those old accounts after paying them off. I also highly recommend getting a credit card as soon as possible, even if it means getting one as soon as you turn 18 years old. This will help you create a credit card very early on. New accounts will lower your average account age, which may negatively impact your credit score. The next thing that affects your credit score is the types of credits you have. The more bad credits you have, that is credits for purchases you don't need, including store credits, the worse your credit score. If you have too many credit accounts and you don't have a mix of different types, this could negatively impact your credit score. Different types of credits include credit cards, installment loans, mortgages, and store accounts. Having a car loan can therefore help improve your credit score, as it demonstrates your ability to manage different types of credits. You just have to be disciplined to pay all your credits on time. The next factor that affects your credit score can be inquiries into your accounts. So applying for new credits when you don't need it is definitely a bad idea. Be mindful when opening multiple credit cards at once or when shopping around for new credit cards. Having too many new accounts may indicate to lenders and creditors that are taking on a lot of new debts and may be a high-risk borrower. You should avoid having too many high inquiries on your file. So if you are shopping around for a new car or comparing mortgage options, these inquiries can be made and they will hurt your credits. The next thing that affects your credit score is your public record. So another factor that affects your credit is the presence of any judgments, liens, bankruptcies, delinquencies that have been reported to the credit bureaus. So if you have any of these things onto your file, this will bring your score down. So how can you improve these credit scores actually? The good news is that having a bad credit score is neither permanent nor fatal. It is possible to recover from a very bad credit score to a good or a perfect score. It just takes time. Keeping an eye on your credit score is a good way to make sure it never goes into the red. Always make your payments on time because your on-time payment affects your credit score. You can learn how to pay off your debts from my previous video. The link is above. Keep a low utilization on your credits. If you want to have more credit, you might also want to shop around for new credit to increase your credit limit. Don't shut down those old cards and don't apply for new credit you don't need. Thanks again for watching. Hope you enjoyed the content. If you found it useful, don't forget, as always, smash the like button down below, and I always insist, subscribe to the video to make sure you don't miss a single episode. Thanks again for watching and see you next time.